That is our talk of the tape today. What happens now to your money as we digest today's developments and look ahead to even more critical earnings in the next 24 hours? Let's ask Josh Brown. He's the co-founder and CEO of Ritholtz Wealth Management. He is here at Post 9. It's great to have you on a day like this. We're waiting for Meta.
Yep.
There's a lot at stake for that stock. And then, of course, we just had Powell and what he did and what he said. And you saw the market reaction seemed to take it pretty dovish.
He was, I agree with what a lot of the previous commentators have said. He was very calm. I was listening before I was watching. I almost expected to look up and see him without a tie on. So this is a different Powell, and I think he feels as though what he's done thus far cumulatively give him the ability to be a little bit calmer. And I think that's the message that the market took away from it. One thing I want to highlight in particular, the home builders are the tell about market sentiment surrounding whether or not the Fed believes itself that it's done.
And what have they done?
Take a look at the
right?
IT. I mean, we're less than 1% from a 52-week high on the ITB, which is pure home builders in that ETF. There's nothing else in there. We're up about 15% from an all-time high there, but we're up 42% off the July lows in that home building index, and those are the stocks that can, should, and will rip if, in fact, the Fed is done. And that, for me, is a bigger signal than anything that you would read in the text.
It was Powell today, from what, those that I've been speaking with just before we come on air, his answer about financial conditions, or leading you to believe in the way he answered that question, was that he's not that worried about financial conditions having allegedly loosened because of the rally in the stock market that we've seen. And that's why stocks took off at the moment he said that. He had every opportunity on multiple occasions today to talk the market down. He didn't.
I think there's two dynamics at play. When Powell came out, the S&P jumped 100 points. That's not buying. That's sellers unwinding that. That's, to me, that's very indicative of people who said, let me put the 50 basis point bet on just in case. And they had to unwind that. But the second step to that is the buyers who've been waiting, 4 months, 6 months for the whoosh lower. Today is the day where it feels as though they said, you know what, we're not going to get it. Find me something that's decent, and I'm going to buy it. And I genuinely feel that there was so much of that this afternoon compressed into that last 90 minutes. And you have to just sit back and say a lot of what we're seeing is not fundamental. It's positioning related, and that's okay, too. The market will accept that as well.
So we're ostensibly 2 minutes or so away from Meta, and we'll get to that in a second. I do have to give a shout out to Joe Terranova, who's been sitting with me in front of you, all of you, lately, and even today on halftime suggested that Powell's not going to be as hawkish as they fear, and what's going to rip? High beta. The Nasdaq's going to rip.
Look at the Nasdaq.
What happened? Nasdaq's 2%.
Yeah.
As we finish and look at it here in overtime, a 231-point gain. The question is Meta going to keep it going? And then we look ahead to tomorrow, Alphabet, Amazon, and, of course, Apple. Boy, there's a lot riding on that right there, which you are watching. 2% today in the Nas.
Yeah, he's a good kid, that Terranova. You have to almost separate two things in your mind right now. How much are the Nasdaq giants down because of the macro and/or fear of the macro, and how much are they down due to their own fundamental challenge? And in the case of Meta, it's both. And it's no surprise that this stock has rallied recently with the group, but it's no surprise that it is still one of the furthest away from its highs in an environment where a lot of other technology companies have come a long way back. And tonight is going to be one of those nights where we find out whether or not Mark Zuckerberg cares what his stock price is and what Wall Street is saying. My guess, and I have no position in Meta currently, my guess is that he's going to be conciliatory toward the voices urging him to lower the spend. It's not the right macro environment for the way at which he's been pursuing the fever dream that is the metaverse. And if he gets that message and they indicate it in any way, it probably takes a little bit of the weight off of the stock.